Okay, good morning, traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today's Thursday, October 4th, with non-farm payrolls on tap tomorrow. Great to be with you guys this morning. Good morning, Jaya. Amen. Great to see you, Marco, Mark. All the Pete's are in the house. Pooja's here today. Christopher, great to see everyone here. Amen says, good morning, Michael. How are you today? God bless you always. Thank you, man. Yeah, steady improvement. Steady improvement. I'm sure you guys are going to hear my voice get more and more chipper every day. So great to be with you guys. Well, it's the first month or the first week of the month. It's the first week of the quarter, and volatility is delivering. What a way to start it off. Dollar's been ripping face ever since the start of the week, guys, but we're coming in some pretty interesting areas. Non-farm payrolls are on tap tomorrow. We'll go over the expectations there. We'll go over, obviously, the DXY to give us a picture of where the dollar is trading ahead of this release. Also on the menu, we'll touch on the TNX, by the way. I know a lot of people have been talking about yields. It's been all over the headlines in all the financial news publications. So we'll just take a quick reference there. Dollar yen in ahead of the FOMC, the NFP print rather, for short. Dollar CAD, dollar Swiss, Aussie yen, and pound Oz are two trades that I've been following with you guys here in the webinars and also on the intraday charts, but really interesting move. Aussie yen broke, okay, or excuse me, pound Oz broke right through the resistance range that we were highlighting early in the week. So that moved a little bit higher, or much higher than we expected. So then Aussie yen was the one that actually played out pretty well, holding to that channel with the downside thrust. You're seeing, tends to be a risk sensitive pair at times. You're seeing that also manifested in some of the equity markets today. We'll take a look back at euro and gold. Okay, starting the month looks pretty interesting. Aussie dollar, pound, and crude. Any other questions from you guys or trade setups you'd like to review? As always, feel free to throw them on the message board at any time. Okay, let's jump right in. So, non-farm payrolls are on tap, obviously, tomorrow. So we want to take a look at all the dollar crosses that we've been following. We'll take a look at all the majors and some trades that you can look at if you want to stay away from dollar kind of positioning into the release. So we'll take a look. Here's the DXY. Eman says, I'm long 114.70. We'll appreciate your update. We'll get right to that. Let me get just to the DXY first, okay? Here's the issue with the DXY. This is pretty big. Okay, this is the levels that we highlighted on the first of the month, right into the open. 96.09 is the high week. I had a mistype there, guys. It's actually 96.13. I had to adjust that, but we went over that earlier in the week. Right on this slope. This is the 38.2 line of this pitchfork. Okay, pretty decent on the way down. Nice pivots on both sides. Accelerations on the breakout. 38.2 line was perfect support, break acceleration, resistance in September. I think that was July, and then here it is again. This is what we are right now. Okay, so look, it could still pop up into 96.98. That's not only the high of the year, but it also takes us back into that parallel, 2011 slope line. So this parallel right here off these highs, break acceleration, perfect support, break acceleration, resistance, resistance, converges on the yearly high right around 96.98. So from the weekly standpoint, okay, the larger picture, you know the critical levels to watch for DXY. We're just kicking off the month and the quarter. So major event risk on tap tomorrow. If we were to get some sort of exhaustion spike, it's either here or here if this is going to hold this broader downtrend. If we get through this, guys, 97.87 is just a target. Yeah, it's a decent pivot in price. But from a slope, from a structural standpoint, it's been very clean. Okay, all of these parallels have been insanely clean. So if we make it northbound of 96.98, we're talking, much larger rally. All things held constant, favorite scenario is that we find failure at one of these two levels early in the month. Okay, so I don't know if this is it or if we get another push tomorrow. These are the levels to watch on the DXY daily chart. Okay, interestingly enough, well, before I jump into the 10-year, here's the daily chart. Okay, same scenario. It's the high week close, 96.13. Looks like I didn't adjust it on this one either. Okay, there it is. Hey, Dagon, great to see you in the room, sir. So look, we've had a 1, 2, 3, 4, 5, 6 day stretch to the upside. We looked at that yesterday, guys, right? On Tuesday. Remember on Tuesday, we took a quick look at the consecutive bars indicator, and we were already pretty much testing extremes. Okay, now here we are with 6 consecutive days up. Previous to that, the only one was a 7 day advance. That saw a pretty decent high in early December. Privy to that is right here. That was within a really strong uptrend, so you actually only saw a pretty quick recovery or a pretty quick correction before resumption. But long and short of it is, when you see these kinds of extremes, especially heading into the start of a new month and new quarter, definitely time to be cautious. So yeah, I'm looking for exhaustion. Yesterday I told you, or earlier in the week, these levels that we were looking at on the intraday chart. Okay, it's the same exact levels. Here's the intraday chart from the Sunday open. Boom, we broke through here. We failed right ahead the 618. We came and found support again, broke through the 618. Here's the high week close. Again, I have to adjust that one more time. 96.13. And we're back at 96.13, pulling back. There's a 618 of support. So the levels have been ping pong, okay, really clean. Heading into the close of the week, heading into non-farm payrolls, like favored case scenario again is for some sort of exhaustion high to be manifested in the dollars. If we get a spike higher, these levels to look for possible exhaustion. At the end of the day, we need a concrete break back below 95, essentially 94, 92. That would be a basic and objective weekly opening range low, and certainly from a structural support level, it's a decent confluence range to shift the focus lower. So, dollar strength can still manifest, guys. What I'm trying to explain is there's still 2 levels of interest where we could see some dollar push, but I wouldn't be looking to get aggressive on any long dollar exposure from here. Okay, it's been a pretty decent breakout of a multi-week downtrend. You've seen a decent recovery. We've made it through the 618. I bet you 786 is not too far off. Where's the 64? Yeah, both of those levels. So you still could see a little bit more upside, but we're looking for exhaustion. Looking for exhaustion. Any questions on the DXY? No level changes from that update on the first of the month. So NFPs are on tap tomorrow. What are we looking for with NFPs? Well, the major headline that people are probably going to run with is the unemployment rate is expected to downtick to 3.8%. Now, with that as a caveat, we always want to recall keeping a clear focus on what we're looking at with broader labor force participation. If that holds as expected at 62.7%, then a drop in the unemployment rate would still be a pretty bullish, I don't want to say bullish, but a pretty constructive thing for the economy, right? Still continuing to show strength in the labor force. I don't know if you guys caught it yesterday, but some of the headlines were covering some of the remarks made by Chairman Powell in an interview yesterday. He's essentially continuing to highlight heat and overheating possibly in the labor markets, saying that is nothing to really draw down the markets right now, and he's basically trying to stay ahead of it, is the gist of it. So he sees broader strength in the markets. So headline figure is expected to come in at 185,000. Remember, last month's read was 201,000. Unemployment rate, like I said, expected to drop from 3.9 to 3.8. And as always, we'll be looking at the average hourly earnings to see kind of a gauge of wage inflation. That's expected to come in a little bit softer at 2.8% from 2.9 average hourly earnings. So it's a gauge of inflation in the labor markets or inflation in wages, which is what the Fed is essentially looking for as sort of a base case scenario to move. So things we'll be looking at, again, labor force participation. We want the private, specifically private payrolls. The breakdown of the non-private read is expected to come in at 180,000 in and of itself. So we'll see how that pans out. Now, I will come back when we cover dollar CAD. Don't forget, we are getting CAD employment at the same time. Double whammy Friday. I love those. So dollar CAD has been a setup that we've been covering. We'll cover that next. Um, but for the release, one other thing you want to keep an eye on, and everyone's talking about, is yields. Okay, this is the yield on the 10-year Treasury note. I'm not sure if Jamie's been covering this with you guys. I'm sure he has. We both, well, he covers it way more than I do, but this is sort of a focus I've been watching. And I've showed you guys this chart before. It's a couple months old now. Really, 328, 332 is a major, major area of resistance in 10-year yields in the US. So obviously, guys, this is log scale because we're working on a percent base. This is basic trendline resistance extending back to the 1981 high. Yeah, that's not a mistake. Okay, decades long resistance. So that level converges on the median line for the current operative slope. This is just off the lows from 2012 and 2016. 50 line caught nice support, never closed below it. Again, bringing it into a line chart to kind of give you, this is the weekly charts. Well, we did. Pretty brief though. Here's the rally. We had a couple of months of consolidation, breakout. This is a decent pivot in price just for the lows they made in 2008 there, September and February. 2008 opening range low. Decent pivot in price, decent pivot in price. That converges on the 100% extension off the lows and the median line. So any way you slice it, 328, 332 is huge, huge for yield. So an area to look for some sort of reaction. If we get the breach on whole, the weekly chart leaves room for like 4 guys, 392 or 395. And that's just a soft target. Your first basic 236 of the entire decline is way up at 4. Now, these are yields, again, we haven't seen in quite some time. So it is going to make headlines. Definitely going to see this all over the news. But just be mindful, especially if it gets really, really popular over the next couple of days, next couple of weeks. As it gets higher, 328 is a massive area, 328 to 332 on an intra-week basis even for resistance. Okay, so something to keep in an eye on as we get early into the quarter, into the month. And with non-farm payrolls on tap and DXY trading right near resistance, something to take note of. Questions on the DXY, questions on yields, questions on non-farm payrolls. We'll go over all the dollar majors today for sure. Okay. Next, let's hit euro. Okay, just as a decent sort of inverse trade of what we're looking at here with this index 60% nearly the euro. Here's what the euro weekly chart looks like. Okay, and this is also an area that we've been talking about for a while. The low week reversal close 1436. Okay, is down here. The 618 retracement of just this basic near-term recovery is 1498. We basically probed a low right in that zone so far. This is the weekly chart. So again, I'm showing all this, guys, because it's the last webinar of the week, and things to take note of tomorrow on the close. We'll look at the intraday chart in a moment, but a close above 1497 would be very, very cautious. I'd start to, we're basically looking to see if this is just a lie, guys, or this is just a near bounce before a break lower. And this is going to be the tell. You have upslope support. You have a basic 618, like I said. Again, that range extends into the low week close. So even if we're going to test a more meaningful recovery or more meaningful drawdown, rather, this is still what I would allot to, down 1436. But a weekly close above this would certainly suggest you want to be cautious. Remember, our focus turned lower last week. You had an outside weekly reversal off resistance. This is the first support hurdle. Okay, this is the first support hurdle. Here's the euro on the daily charts, and here's what we've been looking at with euro I think that was on the second. Yes. Yeah, right here. Okay. We'll come back to this chart in a moment. Here's the daily chart. All right. So you all know I was looking at that 15. That's that 1497 level. That's the 618 we're looking at in the weekly chart. Former swing lows from earlier in the year, 1510. Okay, was the level I would have liked to see hold. Here's the slip below. And again, it's early in the month, early in the week. We'll start moving our monthly markers, I guess, today. Here's your week monthly open. So, you know, I'm looking for exhaustion. Could we still get a stab lower? Yes. Could the dollar still take one stab higher? Yes. And that's why, you know, early in the month and early in the quarter, we have to be very cautious. But that extreme leaves a little bit more room heading into non-farm payrolls. If the dollar does knee-jerk lower in euro here, hot before we start to rebound, this would be the slope I'd look for. The intraday chart is really where all the action's at. The only thing I don't like is this last break we made. In fact, this recovery here, you guys know I was talking to you about this in the webinar. There's actually a decent long position. 3/4 of the position got taken out there before the last quarter got taken out at break even on this slam because I was looking for the median line. But whatever, you know, I'll take a quarter break even any day of the week. So look, there is divergence on this 4-hour chart with price action making a lower low, the oscillator making a higher, if not same low. You know, they're both below 30, so it's a weak signal. But maybe this is the fake out for everyone early in the week. I don't know. All I do know is that if it closes the week and settles above northbound of 1510, 1497, that would be encouraging for at least a near-term recovery higher before we start to sell again. Okay. Ideal scenario, by the way, if the dollar kind of sells off and finds some stronger support before the bounce, if this gets to the median line, we have to move these levels, by the way. Let me adjust this for you. Wow, that puts a lot of emphasis. Where's the 200 day? Let's find this real quick. Excuse me, guys. Bear with me one moment. Okay. Okay. Um, so yeah, if we get close to the median line, we get an opportunity to kind of fade. I think the last stab lower, that lower parallel, let's just kick this out to the 786. That'll converge on slope a little bit better, a little cleaner. I just have a soft target at 1436. I was looking back at the chart to see where I derived that. There's something there. I'll have to go back and take a look. It might be a reversal close, but in any event, those are your two downside targets, 1411, 1436. If we do break lower, don't chase this from here. Don't chase this from here. Below the median line, looking for entry if we get an exhaustion, but from here, I do think that the recoil has a little bit more of a bounce. Someone was long. Someone here, Iman, I'm long at 1470. We'll appreciate your update. So you're in from 1470. I'm currently trading at 1511. So depends how you want to play this. Look, do you see how I have this pivot highlighted? So 1510, 15, what we highlighted earlier in the week, that's now near-term resistance on an intraday level. So basically, if this was going to hold, and this is just a little bit of a breather before the next move lower, this is maybe where you fail. You have some former swing lows there, and obviously these former swing lows from here. The intraday chart, look, here's what it looks like. I think you have a little bit more room. Again, this is just my personal opinion, man. There's that 1530 level, which is the 2016 high close. I took it off the daily chart, I think. Is that true? Yeah, I took it off the daily chart just for the sake of clarity here, but it caught a lot of swing lows, that 1530 level going back. Do you see this? Let me just bring it on the intraday. Right here. Boom, 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 boom. Acceleration, acceleration, boom, boom, boom. You see these? It's all 1530. So look for a reaction there. If you sail right through this, man, there's no problem at all. So maybe take a little off the trade here, at least break even heading into tomorrow. Anything I'll say about tomorrow, guys, if you have any positioning on that was more of a short-term outlook, look, it's going to be the first major event risk of the quarter, of the week, of the month. Look, just let it play out. So I wouldn't get too aggressive with your stops. So anything into tomorrow, I'll be at break even or better. But if you get through this level, these are basically the parallels you want to pay attention to. Basic 38.2, this entire stretch is still 1597, still below 16. So here, Eman, and here, those are the scalp targets. And there's nothing on there that's different from the update. Basically, this slope in red. Well, first, this high close, you're below here right now. So this high close, this slope in red, and then the median line converges on a 38.2. Does that help? Here's the 120. Nice entry on that. Eman says, got you, yes, to maximum help. Awesome, awesome. Nice entry on that. Well done. This is ongoing divergence. Here's the 120-minute chart. Lower low, lower low, lower low, higher low, higher low. We want to see some shift in momentum, though, so don't get too aggressive on this. Here's the 60. Yeah, watch this. Watch this region. We've got to get through this. All right, and that is euro dollar number 2. A little bit lengthy of time there, but we went over some important topics, I think. So that's 1. We'll say the TNX was 2, euro was 3. Let's hit yesterday's report, dollar yen. So remember, dollar yen, the focus was looking for exhaustion. Early in the week, we had highlighted a couple of interesting levels. This chart is just sickening. Okay, it's sickening. Here's the dollar yen from last night's update. Super clear. What a clean chart. For the abomination to have these kinds of moves month in, month out for a couple of weeks now is ridiculous. So we talked about 1327, 1338 for quite some time. So much was lined up there. You had the opening range highs for the year. You had a 200-week long moving average. You had a 618 retracement of decline from the 2017 highs. All of that marked at this region. We've covered this and documented this breakout in depth. Here's the first major resistance hurdle. Okay, you have the former swing highs from late last year, specifically in October. That gives you 1474. The 764 retracement of this same decline is 1531. That's the zone of resistance that we're looking for. Initial reaction. So either a drop into this, a move into this region, then a drop lower before a continuation, or if we do breach, what do we expect to see? What do we expect to see? Something like this, acceleration, right? No dilly-dallying. So look, this is the initial touch. And I don't know, again, if this is going to materialize to be the high, but this whole region puts the immediate long side bias at risk. So heading into the close of this week, heading into non-farm payrolls, that's the focus. Is on, do we get exhaustion between 1470 and 1530? Now, it's a 50 pip range. I understand that. It's pretty big, but this is the weekly chart, okay? So something to take note of. No change to that weekly chart from last night. And this is the same weekly chart we've been working with. Daily chart looked like this. This is the cleanest, I think, view of current dollar yen price action. Here's that 38.2 line. Okay, the current ascending pitchfork formation off of this year's low. Okay, super clean. February hot, low, high. March low. Pretty sure it's a 38.2 line. Yep. Okay, so we had highlighted this level, or again, 1473 is going to be that swing high that we made from November. So even into tomorrow, even if we were to spike higher, this whole region be the first area to start to look for at least a near-term setback. That 1327 level was big, okay? And when we got it, sure did get an accelerated run. Nice. This would be your first sort of level of interruption. Above here, for 1530, 1550, I think that's an awesome region too. It's a larger 618 retracement, and just the near term from the 2017 decline, it's a 764 as well. If you turn this into the 786, it comes in just higher, but this would be the next like zone if we do breach. But this is certainly a level to look for possible near-term exhaustion. Look at the daily chart. Again, we want to see how this looks like into the close of the week. Keep that in mind. All right. Looking for exhaustion with near-term event risk on tap. And again, we'll start moving our monthly markers. I'll do it tonight. Intraday looks like this. And here's what we look like last night. So we noted 1474, looking for resistance either here or on a stretch higher into the parallel. You know, didn't get the stretch higher. It actually, that ended up being the high last night. As I was writing this, it just started to melt, and here's the move lower. If NFPs offer a drop, again, 1370 in my mind, not tomorrow per se, but just the objective weekly opening range low is what I would say for tomorrow. This would kind of just put me out of the trade, or it would kind of invalidate, excuse me, the long side near term. Okay, you still need to get through 1308, 1327, that key region to actually make you bearish. But at least for the near term, that would be what I'd label as, bullish invalidation. So I'm not in anything on this as just as a disclaimer. I was really hunting and was tempted to jump into a short last night when I first started seeing this thing fizzle. But at this point, again, there's major event risk on tap. We're about to close out the first week of the quarter. I just want to see how this pans out. If it drops and finds support between 1350 and 1370, maybe that's the only thing I would be looking for on dollar yen. But just a really clean chart on whole. And specifically heading to tomorrow, just look at the reaction that we get near the median line, if anything. And on the median line, that's that 1370 region. Okay, any questions on dollar yen? You get some labor cash earnings and leading index tonight. Household spending is kind of the one I'd be looking at for that print. It's a little early tonight, but that's about it for event risk from Japan. Eman says, thank you. You're more than welcome, Eman. Okay, that's number 4. Dollar CAD. So we got the double whammy, like I said, employment read tomorrow. Here's what the Canadian dollar looks like. We've been following this one very closely. Remember, again, on the 1st, we were looking, here's the dollar CAD earlier in the week, we were looking for some sort of corrective bounce. Okay, the risks for a near-term recovery, you'll be looking to fade and move either into 2880 or 2908, both areas of interest. So this is what we look like early in the week. You were looking at some divergence here as price action continued to make a series of lower lows. The oscillator just didn't. And it did hold 2778, topside breach above the weekly open, 2846, shifted the focus higher. Last night, we were trading right at that initial target, 2880. So as I said last night, it's either here, literally, like right here, or here. I call that 2908 into 2916, 2917. This is basic former slope support. We gapped below it. That would fulfill the gap that we made on Sunday. So to fill the gap, it would require 29.07. And then the underbelly of that is a little bit higher. So I'm looking for exhaustion at one of these two levels. If you're looking at longs or you were in longs, these are definitely levels to take some profits, if not close out completely, because I'm looking for exhaustion here. Here's dollar CAD now, or that was at least the plan. Okay, here's dollar CAD now. It's still struggling at 28.88, but with tomorrow's data on tap, I'm not going to front run this one. What am I going to say? A trade like this, under normal circumstances, I'd probably be already in this. Just looking to play a real near-term move to the downside move. But because tomorrow you're getting employment reports on both sides, it's a little bit. I think it warrants a little more caution. Yeah, it still looks like it could push higher again. Hold on. I mean, look, I don't want this to happen, but we have to allot the scenario. So if we get, real crazy radical move tomorrow, that 50 line has been awfully clean. Support, break, acceleration, resistance, break, acceleration, converges on the 618. That's 29.67. Leave that level in view, okay? Base case scenario, we're going to stick with we're going to stick with our game plan. Ideal, the favored one. I think I said it. I wrote favored, right? Yeah, or just higher, which is the favored one. Into 28, I wrote 29.08 into 29.16. In times, a little bit higher. It can even get 29.20, guys. That's still the idea. That's still the idea. Now, again, there could be some sort of inflection point where you get a much weaker than expected CAD employment read with a much stronger than expected NFP. In that kind of scenario, the top side, a much more stronger run, you'd be looking for 29.67. All right. Any questions on dollar CAD? Double whammy employment Friday. Always a fun time for this one. So tread lightly, but we're likely to see some nice volatility here, especially this week. This thing has been kind of, I mean, despite the dollar gains, guys. Now, obviously, we've gotten that uh, news of the trade agreements that have been happening with both Mexico and Canada with the U.S. So that, obviously last week was the onset of the start of the rally here. But despite the gains that we've been seeing in the dollar across the board, just ripping face, it's been struggling to really make any forward play against CAD. That's a tell. That's a tell. In fact, if we just take a look at relative performance. Oops, wrong screen. Sorry about that. Let me get on the Bloomberg terminal here real quick. This is an interesting fact you'll love right here. Month to date, Loonie is the only currency stronger against the dollar. Aussie's down 1.83%, Kiwi's down 1.7%, Swissy's down 1.7%, Euro down 0.7%, Yen down 0.3%, British Pound down 0.2%, Loonie up 0.26%. So that's a tell on a week where you have massive dollar strength across the board. Loonie's holding its ground. So I still do think the right trade here is lower. And I just think we need to pick our entries, wait for this dollar sort of run, this blow off to cease But here's the daily chart. I mean, nothing changes. It's a pretty clean downside break of the entire yearly uptrend range we've been following. So even if it's just to fulfill the gap, that would be 2907. But largely speaking, we're looking for exhaustion here before resumption on a move lower. All right. And here's CAD real quick on the weekly charts, also to keep in mind why this support bounce here wasn't so surprising and why we've been looking at since the weekly open is precisely because former upslope or downslope resistance, we broke through. This would be the first place to look for a rebound. Okay, moving right along. Let's pick up the pace. That's dollar CAD number 5. Number 6 is Swissy. And a breakout's a breakout. Okay, the focus to start off the week on this trade, here's the daily chart. But the focus to start off the week we've been talking about was this region between 98.45 and 98.67. You're looking at the 618 retracement of the decline from the yearly highs, looking at the initial yearly opening range highs, then decent pivot in price. You got the 100-day moving average, all of it stacked right here in this region between 98.45 and 98.67. So the initial inclination to start the week was look for resistance, look for a pullback. Let's try to short this. Let's try to play the pullback. Didn't work so well. Didn't work so well. I did take a jab out of it. I took a quarter off when I started getting a little skeezed out, and then it obviously broke out and took us right off with a quick stop there. So quickly wrong when we want to be wrong. When we are wrong, we want to be wrong quick, and that's exactly what happened. Broke right through initial 99.01 level. It's the first level. Broke, and it's been offering some support. Next region of resistance is 99.83 into the high day close, which is basically parity, 10014. You know, on this one, it's been pretty clean as far as the levels are concerned. Here's Swissy, by the way, on the weekly charts. Okay, this is, you know, big resistance, right? Multi-year trendline support resistance. It's the high that we made back in October. It's the high that we made of last year. It's the high that we made back in April. It's the high that we made back in July. Converges on slope and the high week close for the year. Okay, it's a big, big level. Big, big level. So Swissy, dollar still has a little bit more legs. If we get a move higher, look for exhaustion near these two regions. Break below 98.45 would put us neutral. Bullish inval, still at 97.84, 97.88. Any questions on Swissy? Marco says, when did you take a quarter off? I literally took it off before, or right before I went to bed. I think it was Asia trade. I just didn't, you know, it wasn't panning out. A great trader once told me, and I don't want to, I don't live with this by heart, but he told me once you get into position and it doesn't give you an expected move in the expected time frame, that was my problem with his assessment, is that it's typically a trade that doesn't work out too well. It's not a very good thing to live by because sometimes you have to have patience. I always tell you guys patience pays in it, but there was no read for me to press it, so I just took off. You know, I think it was like 8 pips in profit. It wasn't actually at any target. It was just trading towards the range lows. Just wanted to reduce position, basically, reduce exposure. And then we got stopped out with my stop was just above that 98.67 level. So look, it's a breakout though, right? So I do think it's got a little bit more legs to go. Decent like convergence spot. So you know, I can't justify getting long here. At the same time, there's nothing pending right here for me to try to press the short. So this crosshair right here, guys, by the way, the reason I left this on there, this basic trendline support, break was acceleration, is because that slope converges on the level that we were looking at anyway, the soft target at 99.83. If we hit a high energy zone and no high energy emerges, look to another level. Ty? Yeah, I guess. It took me 30 pips of loss to understand, said Marco. um, you saw immediately that it was not going to work, right? Okay, Marco, you're just making some comments. It took me 30 pips. Yeah, the thing is this, guys. I'll happily forego the amount of gains in an effort to be a little bit more to manage my risk a little bit more aggressively. You know what I mean? So, for example, just to give you guys an example, Marco, if this inevitably had broken down and it shattered 97.80 and it was like just complete, we broke the upper channel. Yeah, if that happened, I probably would have been pretty pissed that I took a third off of the trade. But I'd rather have that regret than, than eat the loss on the full allotted position, right? Luckily for me, and part of my trading, I always, if there's uncertainty or not emotional, if price is giving us reason to doubt what our expectation is, I don't necessarily need to bail on the trade, but I'll take a third, a quarter, a half of the position off. I don't care. If it works out, I'd rather take that half gain than take the full loss. I'm curious about your strategy around the level. Yeah, I mean, that's how this was a whole zone specifically even. So there was a decent entry, an opportunity to take the short, but once it started in playing out, you saw that momentum. You start to look at real near-term momentum, Marco, and when there's support at 50, and you're not getting anything below that even, it's not necessarily a trade where you want to sit in the trade and kind of hope for the best. Or we know 40 is what we always mark as what we want to see support. Not seeing any breakdown per se. And then obviously the opening ranges, right? So we look at the opening ranges for the actual session. I look at the Aussie opening range. I look at the US opening range between 8:30 and 9:30. And if that range breaks to the other side of the trade, well, then there's no need for me even wait for a resistance break, right? And besides one other thing, Marco, and everyone in the room, whenever we're taking a position where we're shorting, we're taking the opposite side of what the near-term trend is. Yeah, anything that freaks me out, I'll reduce positioning because we're going against the grain. We don't want to be the fool who's trying to call the high on every stretch because that's a way to really slaughter yourself. But if there is opportunity, big resistance range, I thought it looked kind of like worth a couple of shorts. Yeah, I'll jump in, but with the recognition that we're going against the market, much more respect. So smaller position size when the market starts to fail at the lows and it's not seeing the break they're getting, momentum is not getting downside thrusts. Even this break lower here, momentum grounded. You didn't see us even taking out the session opening range lows. So those kinds of tells, there's no point in sitting there and being stubborn. I'll bail on those positions, if not reduce or take a break even stop on it. Make sense? Says that was my mistake at 98.50. So Marco, I hope we're talking through this. I hope that helps a little bit. Let me know if that gives you any tell. We had that yen trade last week, 113.27, and it's Saturday. I'm sorry, you're saying it sat there. I have taken it off. 113.27. Are you talking about dollar yen? I'm sorry, did I miss that one? Sorry about that, Ty. Okay, Swissy, any questions on that? The only other thing I'll talk about, I guess we'll cover the rest of the dollar crosses before we go into some of the exotics. So let's hit Aussie, and then we'll hit sterling and crude. Here's Aussie real quick before NFPs. This thing has collapsed, much deeper than I thought it was going to go. You've probably seen I haven't been giving too many updates on Aussie. Yesterday, I think I did put out this on the on Daily FX, just showed him this monthly chart or this weekly chart rather. Look, this is a pretty big area or pretty big tell, I think. This could be just a slaughter fest. Everyone's going to get faked out. In fact, their sentiment index for IG is actually calling for a strong bearish position as well. Excuse me, if we close the week below 70.85, okay, maybe that has merits, but watch this slope on an intra-week basis. I wouldn't be surprised if we hold above that. Look, these kind of momentum triggers, I've seen this happen time and time again. I'm not saying this is definitely what's going to happen. I'm just saying this is a possibility. We have a 3-point resistance trigger. This pullback, if it finds support here on a closed basis, and especially if that ends up being a lower low and we get divergence, that's actually a really strong bullish signal. Okay, now again, I don't want to be the guy trying to call the low, thinking I'm all slick, but we have to be just aware of these, just trying to tell you what I'll be looking at into the close. So primary example, if we get the market closing the week at a lower low here, even if it's in this region nestled, or even after a spike into that lower parallel and we close there, divergence, and especially if this swing low ends up being above that former resistance trigger, now support, that'd be a pretty nice area to find some support. So I'm just saying, I've seen those happen before. That's what I'm looking at on the weekly chart. And that's what I want to see happen in Aussie. It's been a pretty mean reversion here, right back to the fresh yearly lows that we're making today. This is 786 retracement. Again, downside break below this. You have that parallel 2016 low week close, takes it into 69.70. All right, so here's what Aussie looked like earlier in the week. Okay, there's the resistance hold, 618 retracement. There's the move lower. We've readjusted some of these levels, guys, from earlier in the week, just from those swing lows. It brought in the 786 just to clean things up. But we're basically testing that lower parallel. Here's a daily chart, and here's the daily chart now. Okay, broke right back below that 72 barrier. 71.45 got taken out. 71 got taken out. These are the fresh yearly lows right here. If we push and break that weekly support, I guess we should just put this in. Your next objective downside level, 69.76. Let's call it 70. But I don't know. I don't know about chasing this here. Here's the intraday chart. So even that real tight descending channel, I always tell you guys, I don't like using these really sharp gradients because they don't tend to work too well. But you've even surpassed that decline. So there's just no real conviction intraday levels to work with at this point. I think you kind of need to wait out the data, see how the week close out. And if we materialize a close below this, like I said, there's real threat for further losses here in Aussie. By the way, the biggest loser versus the dollar this week is Aussie. It all started with the RBA and it's just been going downhill ever since. Questions, comments, concerns on Aussie. Typically my favorite trade, guys, over the years, but if you're not sure, there's nothing to do here right now. There's nothing to do here right now. And I wouldn't want to jump into any fresh exposure on the short side here either. So it's kind of a wait and see here for both of these. Okay, now the interesting one is Aussie yen. And here's the cross. Actually, we do have to cover sterling, but let me just cover Aussie yen real quick with this free fall in mind. Okay, we look at Aussie yen. Okay. Here's Aussie yen. So we focused earlier in the week on the fact that this thing was coming and starting the week right off in resistance, former basic slope. So this is basic slope resistance for 2016, 2017. We took a parallel off 2017 low. The break saw acceleration, the same parallel of that gradient off the lows from 2016. Nice support, nice support. Is it resistance now? Here's what it looks like, right? We noted that this was coming into resistance. We also highlighted a very clear resistance trigger and momentum. That's exactly where we were to start the week, and there it is. So the initial objective was to look for a move lower. Daily chart looked like this. You had a nice structure of pitchfork off the lows. The median line was right there on a 618 retracement of the near-term decline from the June highs. That gave you 82.30, okay, essentially. So we were looking for a move lower from there. 81, 80.56 is the bigger area of support. Intraday chart looked like this. Okay, momentum picture certainly looked like it was tired. It did have, if I recall, a weekly out or a daily outside reversal off the highs last week. So it was kind of primed, in my opinion, for the move lower. Here's the Aussie yen now. Okay, here's the daily chart. 81.03 got taken out yesterday. Next level of support is 80.56, 80.58. It's a nice confluence region of 50% retracement of just the near term, just this month's or last month's September range. And then you also have the longer dated 618 key retracement of the entire advance. Now this is not taken from the the drop right there, the big drop. It was more of the low that we made back in July 16th to the high that we just made. So convergence gives you 80.56 to 80.57, and that's on the 50 line of this slope. Okay. So the down, excuse me, the two downside targets are well defined. First one already got taken out. Now the interesting part was the intraday chart because it was really clean. And to start off the week, you know what I mean? Easy divergence, trigger break, and this is one of those trigger breaks. This is the exact thing I was telling you to look for on the close of the week. Right here. Okay, so support, break. That's not when the market turned, but guess what? On the rally, it failed ahead of that support line, that resistance. That would have been a great area, obviously, to enter. So in any event, you had a couple of different opportunities to get long to get the short position on this after these little rebounds. But next, targets are unchanged, so you're essentially still looking for that drop towards 80.56, 80.58 down here. So an outside reversal off resistance, those are typically great plays. The fact that it was an outside reversal off resistance and the daily chart was coming off of major structural resistance, that's, those are your best plays. Those are your best plays. And a good way to play Aussie weakness without having necessarily to get involved in the dollar, and it's specifically because I actually do like the yen lower. This is actually a good way to play both. So I'm still sitting in this one, much smaller position, is left on, but the stop is in the money anyway. So next level, if we get to 80.56, I'm just gonna kind of bail on this. Now risk has been turning over a little bit. You're seeing some softness here. The SPX is looking a little tired at these levels, but if we do materialize with further weakness, it's not necessary, but it could help further Aussie yen downside. All right, that's number 8. Number 9, I got to cover. Yeah, I'll take a look at Euro Yen for you, Ty. Just let me get sterling in before we head into NFPs. Look, we've been covering sterling. The update was on I think it was early in the week. Yes, here we go. Okay, here's pound on the onset of the weekly open. The risk was lower, okay? Downside support targets, we were looking for a move basically into 29.73.80, and then a little bit deeper, you had 29.40 and 29.70s. You took all of them out, okay? Not the 29.70, not 28.70, excuse me, but we basically came all the way into this support, took it out. We even took out this little confluence region, okay? And that's where I start to look for a little bit more of a turn in support in price. I think we talked about this yesterday. We were already seeing the onset of divergence with the lows that we just made last week and early in the week. Here's another divergent point with the low that we made. Didn't quite get into the 29, but look what's happening in price. So, I kind of want to see this thing start to bear arms, for lack of better words. Let's get that 50 out of there. 38.2, still a decent pivot. I'll leave that on. Okay. Okay, this is a much more earlier. I'm gonna keep that pretty light. Here are the levels I'll be looking at for pound heading to tomorrow. Okay. So look, we still can't leave out the possibility of something like this happening, where it washes out into the 618, gets us stabs everyone 28, 70, 29, everyone gets faked out, all the bulls start going, or the bears start going nuts, and then you start to kind of rip people's face off. I am expecting some volatility tomorrow just because of the time period that we're in, and the price action that we've been getting is actually pretty indicative of what happens before some sort of surge of volatility on these releases. So if we do get that drop lower, 28, 77, 29 is kind of like the line in the sand where that's it. I think Sterling would see a lot of losses below that, but I'm still thinking we could base out here and find a little bit more of a floor to jump off of here for pound. Anyone trading this actively? Don't have the guts to get in it since I got back, but certainly that's not true. I did take a position on it yesterday, last week rather, but certainly I am looking for a little bit more of a tell that we've made some sort of near-term low. That's pound dollar number 9. Okay, we'll do euro yen for you, Ty. I know that we're just heading to the butt end of the session here, but I'll go a little longer. I know tomorrow's NFP, so we'll take a little bit more time. Here's euro yen. This chart that you see hasn't been touched since last time I guess you asked about it. So looks like it's still on track rather. You kind of want to start to see this hold here, support, if this is going to work. That's your breakout level. Dagon, is it on the schedule for Daily Effects, Foundations of Technical Analysis? I don't know. I'm not planning on it. I'm still in a doctor's revised shortened schedule, but I won't be doing it. She says, yes, there is. All right, so I'll take care of that, guys. If I change my mind and I do it, I'll let you guys know. Yeah, but I'm not slated to do that. Ty, did you have any questions on this? It's now or never, man. This is either going to hold, you're in a decent consolidation. It's either hold and a push through 32, essentially 31.90 to validate some sort of initial play. The weekly open actually comes in at 32.13. Or if you break below 30.78, same level that we talked about early in the week, that'd probably be Dunsky on that one. Where's the weekly chart, the daily chart rather? So 200-day moving average, August open. It's not really important for the August open, but it has been a decent pivot in price. Slope support. Is the extension? Did we make 100 off the high? This is going to be ugly. Just bear with me. I want to see what it looks like. See, you can see another stab just to complete that if it is corrective towards 130.52. And that converges on former resistance, 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 break, support. So even if you break the downside of that slope, I'd still be mindful of 130.52 to be a pretty decent base this thing could launch off of. But effectively, we're looking to see evidence that this recovery in the yen, this pullback in euro yen, is complete. So look for the topside break of this channel, or look for some sort of strong reaction if we dip into 130.52. Okay, real quick before we close things out, we did euro yen, that's 10. 11. I just want to touch on pound Aussie. This is one that didn't go quite as planned. Remember, we were talking about this early in the week. I was really, favoring this consolidation below slope to break lower. Okay, look for a tag of this slope line, and that is where I was looking to get long. Was this basic trend line off the yearly lows. So if this consolidation broke early in the week, it converged right on the median line, it converged on the 2017 high close, would have been a beautiful spot for the entry on the long side. Market doesn't give a damn what I think. Here's the break. Okay, so I didn't get involved in this one, but for those of you who were able to jump into the long position on the breakout or any kind of pullback since, this is the level you want to take all your or take a large portion of those profits off and stops, in the money, if not at break even, because this is the level that we had turned from earlier. Okay, the high day close for the year is 83.59. 83.60 is what we noted. 83.69 is an 88.6 retracement. Last 3 attempts have failed at that region. Okay, I guess last 2 attempts. So definitely, keep an eye on it. Into the close of the day, into the close of the week specifically, if we do materialize above this, you're looking at 85.08. It's the 2018 high. Okay, we registered that back in March. And then the 618 for the larger decline is 87.20. There's a lot of room here, guys, for pound Aussie if we materialize a break on this run. So watch for a reaction here into the close of the week. That's pound Aussie number 11. Number 12 and 13, really quick, is just crude and gold. We'll start off with gold real quick first. We've been talking about this a lot. Marco, which pair was that for? Is that modified? Pitchfork. Here's gold. Look, the levels are absolutely clear. Okay. Moving right along, 12.14, 12.15, still the level to beat. We've been talking about that for a while. Basic parallel resistance, 618 retracement, former swing lows, you name it, it's there. It's also the objective range highs for September, which we never cleared. So if it clears 12.15, guys, in my humble opinion, that would validate what we were looking for, and that was for evidence that this low is a more significant technical low. It'd be the first time or the highest point that we've seen in momentum, essentially since the highs of the year. So there's a lot to look for. Watch for a breach above 12.15, 12.14 to mark resumption here. Big level. Crude, very similar. Massively important level that we broke through. Here's crude on the weekly charts. I've highlighted this on the update early in the week as well, based on this major key resistance zone. Okay, it's just below 75. Okay, 74.94 into 74. It's the high week close. It's the high. It's the 2011 lows. Next level that we're testing is the 2012 lows. That's 77.26. Just higher is the 2008 trendline resistance in red there. All right, so major levels here after a massive breakout of a key range. Momentum, watch the weekly close. That's the only way we can assess momentum break in RSI. But this is a pretty big level for gold for crude moving forward. 77.26 being the first level of interest on tag for immediate resistance. Okay, that is everything I had. All 13 euro yen. We covered. Oh, you were talking about what that pitchfork was? Euro yen, euro yen, euro yen. Yeah, this is a modified. Absolutely. It's a modified shift. Okay, so you can take the shift, which actually just takes a slightly different take on the angle. The modified shift actually takes you to the basic slope off the lows. So this is going to be the same as if I draw, for example, Marco this, right? Oh, I got to extend it, right? See that line? It ends up being the same exact slope. So that's what a modified shift does. Okay, hope that helps. All right, guys, if there's any change, I do the foundations webinar. I will put it on Twitter, so keep your eyes on that. Thanks for everyone who attended today. Don't forget, Jamie's up with the midweek strategy webinar. Not so mid this week, but he'll be on at 11 to give you guys his take on what he's looking for ahead of the non-farm payroll release. Keep in mind, we're heading into this first close of the week of the quarter. So be a little bit light. If you're not involved in too much positioning, don't get any FOMO, fear of missing out, and start to get complacent. Make sure that we stay as risk tolerant as possible as far as keeping our trades a little bit more meticulous as we just opened up the quarter. And good luck trading into non-farm payrolls tomorrow. I'll give you guys an update later tonight. Have a great weekend. I'll see you on Monday. Cheers.